analogy. To that extent, I mean, Yashish is an actual marathon runner. Funny is, I guess, on this basis, not an actual one, but it is extremely important that persistence and the ability to convey your passion to not just employees, customers, etc., which both of them do very well. For example, the third thing I would say on that factor, and choose your co-founders or choose when we look for, at least in entrepreneurs, is the ability to delay gratification. So anything substantial that you need to do in life, whether you want a good education, whether you want to run a marathon, whether you want to make a successful success out of a startup, it takes time. It takes 7, 10. In my view, 9 years is about the time that it takes for a startup to really hit it out of the park, at least 9 years. So in which case you are giving up a lot on life. Your colleagues from, let's say, your batchmates from school, from batchmates from college, etc., probably are working for the Intels, Nvidias, wherever they are working, making a decent salary, enjoying themselves, 9-to-5 jobs, good life to lead. Yours, on the other hand, is a focused 15-hour days, day after day, and at times what you get to see is disappointments rather than this thing. So it requires a certain personality to focus on that goal at the end, irrespective of what the things are. I'm a bit of a runner, so I know at the 10-kilometer mark, you keep on asking yourself, why am I giving my body so much pain? But it's only because I want to cross that 42-kilometer mark. That outlook is kind of required, and that's what at least I look for in entrepreneurs. On some of the hot buttons, some of the things you probably shouldn't do, etc., when pitching to a VC in particular, I think I hear this. I have no competition from about somewhere between 10 to 20%. I think that is generally viewed as a lazy answer. So never do that. The reason is this, and I'll again give you some examples. So let's say Mendeleev's periodic table. There were 6 other competing periodic tables at the same time, okay, when Mendeleev did it, and we are talking 1.5-2 centuries ago. Let us say Darwin's theory of evolution. There was a guy called Maxwell who developed it almost at the same time, both of them Scottish, as it happened. Now, this guy was Scottish and Darwin was English. So from that same island, on the I might say. So to that extent, there is even fundamental, this thing, all of us know about calculus, Leibniz and obviously Newton. So to that extent, if fundamental, these 3 probably will get counted as amongst the top 20, 25 things that we learned, any of us learned in our science, maths, physics, etc., isn't it? So fundamental discoveries of the world. So in an unconnected world, if people were working on the same problem, it is very highly unlikely that nobody else is working on the same problem that you are. So do not give that lazy answer, would be my advice. Even if you genuinely believe there is no competition, find some substitute, find some analogy, find some similar businesses that people can understand. Most of us are looking at multiple businesses at the same time because we meet, let us say, about 10, 20 entrepreneurs a week. So most of us do not know businesses to the depth that you know, but take the time to find out about what is happening around you, what you consider as competition, what could be a substitute, what can be an analogy, and create a story around it, so to speak, how you are different. Second thing I would say is single founder. Most of us do not like to see a single founder because it is a lonely journey, helps to have somebody along to be kind of a sounding board, etc., etc. It's not that we'll never do a single founder company. I have funded single founder companies, so that happens, but it's an exception to the rule. It's harder to get funding as a single founder, I should say that. And third thing, this is more outward looking for you and mostly our viewpoint, but most of us do not like to invest in what we call vitamins versus painkillers. When a customer has a pain, he needs to solve it, and that kind of a pain getting solved is what we want to fund, rather than a good to have like a vitamin, isn't it? So that's evaluate your business. Is that just an additional feature? Is that a product that the customer needs yesterday, or is it a good to have? Evaluate the product from that perspective, and most of us will take that view, that lens to evaluating your company. On the fundraising bit, I would say that it is a continuous activity. As somebody beautifully described it, it is not a point, it is a line. So maintain the relationships, meet with as many people that want to meet you, as your time permits, obviously. But if I would advocate meeting with as many VCs as you can at every stage of the process, so that, and that light will shine in let us say about somewhere between 10, 20, 30%, depending on attractiveness and all of that. Just keep in touch with those VCs, especially one who you would want to sit on your board, etc., one that you can gain from, one who has a reputation. You should give them periodic updates, even if that VC thinks that you are still too early, etc., So keep these relationships. Fundraising is a continuous activity for startups. It is at the end of the day, it is I don't consider it as the central activity, but nevertheless it has to funding is required for keeping a startup alive. So to that extent, it is your responsibility as CEOs to ensure that that tap never goes dry. So treat that as a relationship, not as a transaction, is the point that I am making. Having said all of this, it is not necessary to always raise money. Money comes with strings attached. Obviously, I would urge all of you who are thinking about raising venture capital also to read Sridhar Vembu's blog, Zoho, as to why he didn't raise venture capital. It's not essential to raise venture capital. Zoho, IndiaMart are some companies. IndiaMart raised venture capital right at the end, or more like private equity right at the end before going public. But they did, they went through the process. Zoho is such a large company without raising a penny in venture capital. So it is possible to do that. There are no strings attached. You can run the company the way you want and be as profitable as you want, give back to society, relocate to Tamil Nadu if you want, like Sridhar Vembu did. Those kind of strings are not attached to doing it on your own. So evaluate your personality and know that any money that comes, any money outside of your own pocket that comes into a venture will always come with some strings attached. Some people will have a lot of strings attached, some people will have less, but there will be some strings nevertheless. So make that choice, make that conscious choice. Today, times are good. I think when I look at it today, the balance of negotiation is currently with the entrepreneurs, because there is kind of a good time to raise money, so to speak. So if you have a half decent team and a half decent product, you will probably have choices as investors. Exercise those choices well, and do not do it just on the basis of valuation, because again, going back to what I said earlier, these are long journeys. You do not choose a college based on how much scholarship it offers you. You choose a college based on reputation, based on what kind of a leg up it will give to you in life. Treat these decisions as long-term decisions. And it's not the firm only that you should choose. Yes, firms have a certain culture. Venture firms have a certain culture. All our partners will have similar value systems, similar. Anybody at Accel Sequoia will say the same thing. But it is, a partner is also very, very important. How comfortable do you feel with that person? Because somebody sitting on your board from 5 to 7 years can be a real pain in all the wrong places of the body if he is not the chemistry is not right. Okay, so be very, very clear. And today many entrepreneurs will have that choice. If you don't have that choice, then there's no point. Choose what you can get, because you need to come keep your company alive. But if you do have a choice, please exercise judgment, thoughtful judgment. Speak to some of the underlying entrepreneurs that the people backed, inventors backed, or whoever is that venture firm. Go out and do due diligence, just like we do on you folks, on the investors. Last thing I always say to entrepreneurs is that, in my mind, the Narayan Murthy of that generation, of the software services generation, that pedestal is still open. That nobody, I mean, whether it is Bhavish or whether it is Yashish, whoever, or Paytm, whatever, in my mind, that pedestal is still open. So hopefully, I keep on hoping, probabilistically speaking, that one of you will occupy that pedestal, and that is very, very important for the ecosystem, because create a great company and be a good role model. Those two things are very important, and hopefully one of you will do it. Best of luck with your ventures.
Thank you, Parag. I'm stumped. It's really nice of you to share your noble and kind words, and starting from storytelling with science stories to having a patient partner in your journey and with the strings attached. And I had one question before I open it to other questions. But is there a common theme in your investment success stories and your investment failures? Is there a theme, or is it you believe it's random? You can see a theme in the success stories and theme in those which didn't go so well.
As I said, the common themes are those two: passion and persistence. Wow. Okay. So those are the only two things that we have found in common. There's almost nothing else that I can find in common between the success stories. Failures, lot to learn from failures, more to learn from failures than from successes, actually. So to that extent, there are various reasons. People scale too early in the game, for example. Those are wrong business decisions, for example. At times, we are slightly biased towards engineers. I don't know whether this is right to say in this forum, but we have found engineers to be more, in our country in particular, to be more of first principle thinkers. This is not to say that chartered accountants can't be first principle thinkers, but given the way education system works in this country, somehow the first principle thinkers end up in some of these engineering colleges. So to that extent, we have found engineers to become to be better entrepreneurs. A grasp of maths, a grasp of and this is very basic, but metrics, etc., is essential for success, because any business, at least when the transactions start growing, even in a B2B business, till you know those 5 key metrics that matter, and you are a CEO, can keep track of those 5 metrics, and you can sift through data to make it information and then knowledge on top. That's sieving, unless and until you can do. So those have been some of the lessons that we have learned from businesses that failed, if you will.
Great. Yeah, we are open for questions for Parag. You can ask your questions now. You can unmute yourself, and once you finish the question, you can mute yourself, please.
Parag, I have a question. This is Christy from Boxfile. Can you just repeat the name of that book which you referred to?
No, Steve Blank in the customer development process. Is that what I was talking about? Steve Blank is a professor at Stanford. He is a 4-time entrepreneur. Epiphany and others he founded. So he teaches entrepreneurship to engineers at Stanford. So look him up. STEVE, Steve standard name, Blank, BLANK. You should be able to find it.
I will. Yeah, thank you.
Yeah, Sriram, you have a question, and anyone has a question can raise their hand also. Yeah, Sriram.
Yeah, hi. Hi, Parag. This is Sriram Vamsi from Proedge. Just unmute. Show me video. One question I had was, so we are in EdTech space, and whenever I have a chat with any of the VCs, either for investment or otherwise, they say it's a crowded space. And we basically are looking to slice the space into science and nonsense, and we focusing on nonsense. You just spoke about CA. I'm a chartered accountant, unfortunately. So I don't know whether I'm the first principal thinker or I really don't know that. But broadly, what we are looking at is exactly try to get that what do you call get the rigor or focus or the thought process which a person should have from early age into non-science. How do you view the entire edtech from the intensity of startups which are kind of doing rounds, and how do you basically think about the slicing of the entire space into science and non-science or non-technical skilling, if I may say so? So that's my question for you.
So what I'm going to say is not very different from what you've heard. I think what has happened because of overinvestment, because of people focusing on it, because of Corona, etc., obviously the sector got a huge boost, isn't it? And that attracted a lot of supply. So that's the challenge here. Which slice, which dice is that important enough? Is that an academy's? Just to take a name, is an academy going to do it? Unfortunately, the reality in the last 2-3 years is small funds like us find it difficult to compete with that kind of capital, isn't it? $300-500 million of capital when it is gushing in, and more at times. When it is gushing in, then how does somebody who's focusing on a niche area going to get there? So there are various strategies. You could build a 50-100 crore company and sell it to one of these guys, for example. So you raise a little amount of capital to get to that stage. That could be a very, very viable strategy, and you could do that. But to pitch yourself against one of these guys in a specific segment, you will get a lot of questions. Like it or not, so prepare for those questions. See, what are you doing differently? First. Second, how big is your slice? And why isn't it not served with by any of these things, any of these guys? So if you prepare yourself for these questions, I cannot guarantee success, but you'll be better off than not being prepared, for sure. So these are kind of basic questions that you will get over and over again, I think. And you should expect that the acceptance ratio will be low in your case, simply because of the overinvestment in capital. People are scared. We have seen the past wave. We had a company which had almost nothing, no overlap with Ola, but because Ola was getting so much funding in 2014, 15, 16, this company just lost all oxygen. Nobody was willing to fund it, simply because they thought Ola was going to do it. If not Ola, Uber would do it. So why fund this company? I'll not name it, but why fund this company? So that's the challenge that happens when there is overfunding in the sector, and EdTech is one of them, unfortunately.
Yeah, Sriram Sundaram, you had something to say.
Parag, you mentioned typically you meet about 10 new entrepreneurs on a weekly basis, and you're saying that keep in touch. So you're telling the entrepreneurs, if you value the relationship, you keep in touch, providing updates. Physically possible for a venture capitalist to be, I mean, wouldn't it be a little bit of bombarding and feel a little drained out, or do VCs accept and see if there are some updates that could really be crucial?
So two things I would say in response. One thing is none of us wants a weekly update. Okay, so quarterly update is good enough. So the frequency of the update. Second, as I said, you have to, as an entrepreneur, you have to figure out which VC to send the update to. So if you pitch to 20, you would be very, very lucky, I would say, to get the eyes opening up or good responses from more than 5. Okay, that would be, in my mind, a good ratio to for the average. I'm not talking about the top 5% entrepreneurs because of the backgrounds, whatever. They are in a different kettle of fish, but I'm talking about the normal curve. In which case we are talking about, okay, did you see the VC reacting positively? Did he tell you that, for example, that this seems interesting, but I would want to see more scale? or I would want to see one additional city, I would want to see an additional vertical, whatever be that case, okay, or get your first US customer, okay. So if you hear things like this, then that kind of a VC, those out of those 5 out of 20 VCs that you pitch to, those keep them updated on a periodic basis, which shouldn't be very frequent.
Sure.
Substantial updates, send it on a non-periodic basis as well, or periodic updates.
Sure.
Yeah, Atul, you can ask your question.
Yeah, I had a very fundamental question. So this I read on the one of the pages of the Sarthi. So revenue versus GMV. So we have a SaaS-based embedded finance-based model. So I was wondering, because we are asset light, or revenue will not be very large per se, but we are SaaS-based. So is that okay to have less revenue in the SaaS-based model, or do you still stress, this distinction of GMV versus revenue?
See, there are some vanity metrics and then some real metrics, isn't it? So it's like, I guess, even revenue they call vanity at times. At the end of the day, cash flow is reality, isn't it? They say revenue is vanity, profits is sanity, and cash flow is reality. So to that extent, I think GMV is one of those metrics, especially if you're making 1% of GMV as actual revenue, then that is a vanity metric at the end of the day. Most of these, in inflated times like these, you might get away with it, but I would suspect in normal times you wouldn't. Forget about getting away with it, etc. That's a very narrow way of looking at things. I think at the end of the day, you can pay your employees or pay your direct costs out of revenues, not out of GMV. So that's a business. You pay your costs from your revenue. So that's basics of business. You don't pay it out of GMV. So net revenues is what matters.
One last question from anyone? Yeah.
Yeah, I have a question.
Yeah, go ahead.
I have a very simple question. Like you suggested in between that while choosing investors, we also have to look at the possibility of like building the chemistry with the investors, and the person who will be like sitting on the board and will be like keep on working with us very closely. So for startups and for many organizations at the beginning are in a very desperate positions to get funds, and they will always receive, positive kind of response from very few after like approaching many. So in that situation, many other times startups are not in a position to like choose investors or person who will sit on the board, and but also it's not possible sometimes to go in depth with the organization who like their kind of approach towards the organization and the kind of strings that you talk about going to like to have in future. So in that situation, how startups like choose the kind of organization they should work is a very difficult sort of choice at the beginning.
No, absolutely. So it is chicken and egg. I know that unless and until you have choice, you can't do what I'm advising you to do. That is understood. But just like you do not compromise on a co-founder, isn't it? You took your time till the right co-founder came along. Treat this as almost that important a decision. It's not that important a decision, don't get me wrong. It's co-founder choosing has to be a far more important decision in my mind, but it's that level of decision in that scheme of things. So if you can make sure that it is an investor who understands the risks of your business. Worst thing you can have is somebody something going wrong, two monthly board meetings after the funding one, and this guy is talking on a different plane, or he gets scared about the business. You are a B2C business, he wants you to do B2B or the other way around, isn't it? So, or he wants you to go to the US when your product is not really hasn't found acceptance in India yet. So so some of those strategic decisions that people can, because they wear the investor hat and they're sitting on the board, they can suggest or force you to implement. I've seen quite a few very board meetings get really bad because of people whose interests do not align, and that's a very bad place to be. It's a miserable place to be as an entrepreneur, because at the end of the day, see, we are investing in businesses, there is risk attached to it. There will be, by our analysis, anywhere between 3 to 4 out of 10 businesses will fail. And that we know, because you're taking that risk. If the guy on the board doesn't understand those basic things and why this particular business could be one of those 3 or 4, then it's a bad place to be. So if you come across somebody who you are not confident about, for example, some angel investors ask for 50% of the company, isn't it? Even if you desperately need the money, you know this guy is smoking something he should not, isn't it? And even if you sign up for that, you're signing up for misery, continuing misery. So should you sign up for that or not is the question you should ask yourself. See, funding at the end of the day is one of the parts, one of the ingredients for success. There are many other ingredients which come. I mean, a customer is far more important in my mind. Spend the time finding a customer if you get into that tough spot. But yes, if you are really desperate and that's the only choice available, then what do you do? I don't have an answer to that question, honestly.
Okay, Parag, actually, we are getting questions. So I'll have to stop somewhere. One last question, anyone? Ashtam has raised his hand, I know that, but quickly, one last question.
Sure. I mean, it's a little naive question that I'm about to ask, sir. And that is like the relationship of an entrepreneur with his or her product, the thing that he or she is doing. Because I mean, I've seen some people who are like, okay, I mean, if we are doing some type of a business for let's say 4 or 5 years, they are able to switch it later on. And I'm somebody who is very much what I can say attached to what I'm doing right now. And secondly, another thing that is related to this only, which is like, I mean, if I really think about you, okay, I'm putting in so much into it. It's like our own child who is there. It will be very difficult for me, I mean, especially to sell it to somebody else later on, maybe 5 years, 10 years down the line, or 2 years down the line. So, I mean, what do you think about it?
So, see, this is a subjective question. There will be many viewpoints. I'll give you mine. But what most VCs should be interested in is the growth of a business, not whether the guy wants to sell it or wants to take to an IPO, etc., whether how attached he is to it, etc., or not. So, let us take two examples. I mean, Funny sold his business after 7 years of running it, and at Redbus, and made it was a good exit for everybody. Okay, whereas Murugavel at Bharat Matrimony has run his business for 15 odd years, maybe more now, and it is listed on the stock exchange. It's not a spectacular stock, but he likes to control the business. So to that extent, VCs have made money in both of those cases, isn't it? If you don't sign up for an exit at all, okay, then you shouldn't raise venture capital, because I think then that's the wrong path to walk, because VCs are 5, 7, 10-year investors. After that, they need to return the money to somebody else. So if you're going into it with wrong intentions in terms of not having an exit path at all, then that is wrong. Then you shouldn't raise venture capital. But if you have raised venture capital, I think it should be immaterial as to how tied you are to it or not. If you are building a big business, then if not somebody buying you, which is actually statistically more likely to happen. Honestly, 9 out of 10 exits are bought exits rather than that 1 out of 10 IPO. Maybe the IPO ratio is even smaller. But if you want to build it, then the way you want to, the way you desire, I mean, you are expressing your desires, then take it towards an IPO. And people will be happy to support you. There might be 50% who might get slightly jittery about the fact that you're too attached to the product, or this is your baby, etc. But there will be a 50% who will understand that you are a Sanjeev Bikhchandani at Naukri kind of an entrepreneur, or a Murugavel at this guy kind of an entrepreneur who wants to take it all the way and keep it forever. as well. Sridhar Vembu is another one of them who did it on his own money.
Great. Great. Thanks, Parag. In fact, I must say it's very grounded and practical advice which we all have got from you. And I've heard you, I think, the 7th or 8th time. And every time I get something new to work on immediately. So thank you. It's really kind of you to spare your time for this session. And I believe everybody here would have got value. Yeah, we can clap for Parag. Thank you. Thank you, Parag.
Thanks a lot, guys.
And I pray that your dream will come true, that the pedestal which Mr. Narayan Murthy has left will be filled by entrepreneur very soon from the
I love
cohort.
that.
Yeah, that will come true. I pray. Yeah.
Thanks. Thanks.
Yeah.
Then, guys.
So we'll continue with the presentation, Parag. If you want, you can stay.
Oh, okay.
Yeah.
Okay.
We have another session for
but I'll stay then. I'd forgotten. Sorry.
Yeah, we have a session. Yeah. So the next is actually introducing the cohort startups. So if you can see my screen, I'll be handing over to Ananya to introduce the startups of cohort 2. This is cohort 2 of the SARTHY Minds program. Yeah, over to you, Ananya.
Yeah. Hi, good evening, everyone. Welcoming all of you to the second cohort of the SARTHY Minds program. The first startup we have is Boxfile, which is a comprehensive cloud-based audit platform enabling automated workflows and simplifying collaboration between teams and clients that will transform your work culture. Inviting Christy and Senthil to further explain their startup.
Yeah, hi. Thank you, Ananya. Thanks, guys. So with Boxfile, what's the problem we are trying to solve? Essentially, we want to improve efficiencies and quality for chartered accountants, both in practice and in corporates. And how are we doing that? We are using AI ML powered audit platform, which will ensure compliance for them through digital audits. We have taken audit as a problem statement and looking at it both from the sides of an auditor in practice and in a corporate side also. And why we are the right team to do it. Senthil and I are actually batchmates from BITS Pilani, 99 batch of Pilani. In fact, Funny is 1 year senior to us. And after Pilani, I went on to pursue my master's in accounting and qualified myself as a chartered accountant from Australia and New Zealand. I come from a family of chartered accountants. So that's where I've sort of seen the pain point faced by auditors. And Senthil comes with a wealth of experience with product management and delivery. And Venki, our co-founder and CTO, he comes with 25 plus years of product development. So essentially, we have complementing skills, all three of us. So that's where we feel we are the right team to do it.
Yeah, thanks, Christy.
All right, so the next startup we have is WhereMySpecs. It offers exact innovation and client-focused consideration with hands-on instruments to customize your eyewear and reducing effort and cost of photography. Requesting Mukut to say a few words about his startup.
Yeah, thank you. So brief about our initiative. Basically, we are providing a marketplace and a digital platform where it is offline optical stores. Like India, we have approx 75,000 offline optical stores, and they are currently actually struggling because of big players like Lenskart and all. And most of the consumers has basically gone online. But this optical business works like in a way where customers, if they get options to buy it both offline and online. So currently, the 75,000 optical stores in India has offline presence, but they also require online presence. But for a simple retail stores, it's always not possible to develop a website, also to promote it and to get footfalls digitally. So we are providing ready-made solutions to all these offline optical stores. Also, we're linking them with different suppliers where they can buy products from the multiple suppliers across India. And once they buy those products online, and these products get automatically reflected at the optical store page. And we do digital promotion for these stores to get more and more customers and the footfall in the stores. So it's basically a B2B2C kind of marketplace, which we'll be developing in next few years. Our team consists of myself and two of my previous colleagues from Essilor Luxottica. We worked with Essilor for 5 years. And in 2019, we actually left Essilor and founded this organization. And currently we are all together in working for this initiative.
Yeah, thanks, Mukut.
The next startup we have is Proedge, which is India's largest online live class for CA, CMA, and CS preparation. With highly qualified faculty, their achievements include more than 50% passing percentage in CA, CS, and CMA exams. Inviting Vamsi to further explain his startup.
Yeah, hi. Thank you everyone for giving me this opportunity. So what Proedge is focusing on is to build a job-linked competency platform for non-science segment. Non-science segment at higher secondary and higher education is almost 67% of the entire student population. But what we have observed in our last 4 or 5 years of existence, when we were basically doing coaching for CACS and CMA, is that there's complete absence of people basically the career paths in non-science is completely absent. There's absence of competency building. So what at Proedge we are trying to do is we've taken a learner segment between 16 and 25, which is essentially 11th class right up to 2 years into your job. And we have basically identified around 12 competencies in non-science, where we would be basically offering a series of courses which will enable the student to kind of not only build competencies, but also have a view of how the industry looks like and be ready for that. And for corporates, what advantage we bring in is that we already work with around 25 of them, is that we basically offer them a role-ready candidate. That is what Proedge envisages. So far, in last year, we handled around 14,000 learners across 250 colleges and around 25 corporates. This year, we are looking to kind of increase that number to 25,000, but more importantly, launch around about 10 competency-based courses addressing different learner segments, which we have kind of identified. That's about us.
Thanks, Sriram.
The next startup is the eighth dimension. Through the art and science of story writing and storytelling, work on the written physical expression of K-12 students, along with developing their thinking process, cognitive skills, and finally making them ready with future-ready skills. Requesting Ankur Dahiya to introduce his startup.
Hi, good evening, everyone. Thank you so much, Ananya, for giving me this opportunity. So the eighth dimension works with K-12 students because there are some expression and thinking skills which are very, very important for a successful future of any child, like communication skills, being more confident and being more creative. And these are the skills which can be built at the school level the best. So that's exactly what we are doing at the eighth dimension. And the reason why we have selected this problem to solve is, if you look at the school structure which is there, first of all, there is no curriculum which helps them develop in these particular skills. They're highly focused on mainstream education. Thirdly, there are no skilled teachers which can help them in achieving the same thing. If you look at the physical tuition options that parents have with them, they don't have much qualified options. So options are very limited. So that is exactly why what we are solving at the eighth dimension through the amazing curriculum of storytelling and story writing, which not only helps them in enjoying the classes, but at the same time, stories work on each and every thinking skills of a child. So that ways they are able to become future ready. In order to start learning from our platform, a parent has to enroll for our courses, which ranges from 2 months to 4 months to 8 months. And we use our mobile application and website to deliver our classes online. Some of the key features of our program are that these are fun-filled classes. We have a small group ratio, like 1:6 maximum student to teacher ratio, whereas in school it's 1:40. So that ensures that what we are delivering at our classes is 70% much more effective than what they get to learn at the school level. And apart from that, we help them become adopt some of the new age coming careers like becoming bloggers, becoming YouTubers, or publishing their own books on Amazon Kindle. Recently, we published a book which had stories of 10 different students, and it's live right now on Amazon Kindle.
Okay,
And
Ankur, I'll have to stop you. I'll have to stop you now, Ankur. Yeah. So we've understood your startup. Thanks. I request everyone else also to keep it short. Yeah. Otherwise, we'll miss the time. Yeah.
Sure.
Thanks. Thanks, Ankur.
The next startup we have is Gigacure, which focuses in the field of predictive healthcare analytics. They aim to revolutionize the healthcare industry by introducing a solution of smart IoT wearables in combination with predictive analytics to detect and prevent any life-threatening complications. Inviting Sarvesh to further explain his startup.
Good evening, everyone. Hi, Ananya. Thanks for the opportunity. And Rohit here. Unfortunately, Sarvesh is not available. And coming to the problem which we are solving, we are managing on the gap which is laid for remote health monitoring, for which if we see that from last decade, there has been an adoption in fitness monitoring devices, but this space is still open. So we want to be a pioneer in this particular segment. What our device does is it measures 6 particular vitals, including from heart rate till your blood pressure, saturation, and temperature. The MVP and or USP, if you'll say, which differentiates is that the focus on vital monitoring has been done on the medical accuracy point, for which presently we have partnered with Apollo Research Institute as our partner, who are doing our clinical trials for a new device, which is already underway. And along with one iteration of a product, which we did 6 months back, that's already available on Amazon, which we are already selling. Taking the feedback of the consumers, we have already updated that particular product, which gonna be launched, which will be in launch in process of, which is in launch process in coming Diwali. And coming to the team size, I am from Practo.com, and I joined Practo at very nascent stages, and I have developed multiple cities, business marketing and business approaches for them. Along with that, Sarvesh is from SAP, and we two met together, and when we had our early discussions around 2.5 years back, started working on the project, and it has been an amazing journey. We have already got some particular customers also who have validated the product, and we think this particular cohort will be very important for us to learn a lot of things and to grow to particular satisfactory level we want our startup to reach. That's all from my end. Thank you.
Thanks, Rohit.
The next startup we have is the Organic Carbon. It is a venture to bring back the traditions of healthy eating through organic products, but also a committed effort to undo the damage that chemical farming has done to our land. Inviting Jayant to further explain his startup.
Thank you, Ananya. Good evening, everyone. So we at the Organic Carbon, we're trying to solve key issues faced by two key stakeholders. On the one side is the marginal farmer, and on the other side is the urban consumers. I have spent 11 years in doing organic farming, and at the same time, I was also the part of the urban consumers. So I was facing both the problems at the same time. So through Organic Carbon, we are building a community of large urban consumers using our D2C subscription technology platform, wherein on one side, we help farmers with the know-how of organic farming and help them to get the access to fair price, which ensures the predictable income. On the other side, by value adding all these products from the farmers, farm produce, we home deliver it through our technology platform to the urban consumers, which helps them to get the access to the healthy food from the trusted partner. So in terms of team, I have the 8 years plus experience in the software industry and 11 plus years of experience in the organic farming. Malvika joined organic farming along with me 5 years back. She also has the technology background. Vishal and Uttam are part of our operations team and the sales and the development team. Vishal has 20 plus years of experience in building businesses, consulting startups. Uttam has the 27 years plus experience in the dairy industry. Thank you.
The next startup we have is Builder Need. It brings PropTech to millions of aspirational home buyers. Along with human touch, it is a single unified SaaS platform. Requesting Vinod to introduce his startup.
Sure, thank you. I think we have talked about EdTech, we have talked about health tech. I think story would not be complete without a real estate prop tech as well, right? So one of the key problem or one of the key benefit we want to bring to a mid-range builder is to improve his sales conversion, improve the unsold inventory. The big problem what we are seeing, for an example, a mid-range builder like a Jain Builders or a Samudra Builders is there is a large inventory in the affordable segment, and they are having the problem is they take a longer time to convert their inventory into sales. And on the other side, there are aspirational home buyers who are looking for a trustable platform, who are looking for information which is available online, a large aspirational base they are not able to connect well to a good builder. Because of lack of trust, lack of online availability of data. So our goal is essentially to bring both the mid-range builders as well as the aspirational home buyer onto a platform. There is a large, this is a large problem to solve. Essentially, there is about close to 13 lakh unsold inventory, 10 lakh coming in, worth about $250 billion in India. And a small portion of that itself is a very target, can be a large opportunity. So we are in the early stage trying to validate a B2B SaaS platform to solve this problem. Two of our founders are complementary skills. Vinod, that's me from the business side, and Raghu, he's also on the phone. He's from the technical side.
Thanks, Vinod.
So the last startup we have for today evening is Get Delivered, which offers quick and easy parcel delivery services using technology and assured data security. Requesting Rohit Nanda to further explain his startup.
Yeah, Rohit, you're there? You must be mute. Okay, I think he must be having some internet challenges. So we'll move forward. We are short of time also, so I'll cover the rest of the presentation quickly. Yeah. So I'll just take most of you through this. Most of you have gone through this presentation. Yeah, Rohit, you're back.
Yeah, I'm sorry, I got disconnected.
Okay, no problem. Yeah. So only program in the world to make a startup fundable, and it's a tall claim, but at the same time, we have the backup to believe it. And the core is strategy. How we are making a startup fundable is using strategic tools and templates. This is the team. If we have time, we'll ask everyone to introduce, but it's a big team of 9 folks with CXO level experience of 200+ years, a startup experience of 50+ years, angel investments in 12+ startups, and we've got diversified experience across finance, marketing, technology, investment, IP, and strategy. Rajaram is our stealth operating mentor investor. That's why you've got Amir Khan's Gajni photo there. Yeah. So a journey of a unicorn, I've covered this before also, but the idea is this is the red boxes where we are playing in this. The success factors is from Bill Gross's presentation in 2017 of what makes a startup successful. So timing, team execution are something external mentor investor can impact to a limit, or external program can impact to a limit. Where we are impacting is the idea and the business model. We validate the startup at what stage it is in. Does it have the right parameters, which we call critical success factors? Are they present, or they need to be present? So that's what we evaluate using strategic tools in the journey. And the red boxes in the early stage of MVP to revenue. Growth stage startups are for the VIP program. So this is the stage. Once we validate, we support startups in raising angel money of average 1 crore. And once we use that money to scale and achieve the next milestone of 5 or 8 lakh MRR, we help the startup raise VC money in the game. And the current ecosystem problems are actually mentors operate in silos, and they try to standardize the program across multiple startups. So currently also we are seeing we've got diverse startups from different domains at different stages. So when you try to standardize a program, some will get value, many may not get value in that standardization game. And they have a selection mindset where they also less than 5% would end of the day succeed and raise money through their demo days. In our case, our objective is to help at least 7 to 8 out of 10 startups achieve their goal. The time duration might vary, and their program is short duration. Our program might take even more than a year for some of the startups to complete. In fact, builder need is is in the 4th month of his program to some extent because he's going through the VPBM exercise again. So it's investment focused. Investment, we believe, is not only money coming into your business, it's actually more brains coming into your business to take it to the next stage. And if you have the right investors, as we heard Parag also say, that if you have the right investors, they help you take it to the next stage. And you have to ensure that you have the right investors, because the wrong investors might create more problems than you can handle. And it's a virtual program, so we've got startups from across India who are joining this. It's highly customized and personalized. So as the startup paces and the gaps come out, the startups work on those gaps, whereas the other startups move ahead. And it's a partnership model with the lead mentor come virtual co-founder. So we are going to also invest into your startup when in the gold stage, in the middle of the gold stage, which you've gone through the presentation. We are also going to invest as mentor investors, all of us. So clear focus on funding, mentor as mentor investor with skin in the game, and its dynamic duration as per the stage of the startup. And strategy, again and again, I repeat, is our backbone. So that's how we are ensuring that the success rate in this game is high for the startup and also for the investors who are investing into the startup. So that's our key role, which we felt missing in many times in this relationship building between startups and investors. So this is the next step. If there is an angel investor or a VC in the, if you're hearing this program, you can reach out to Sriram, who's leading our investment vertical. His email ID is here. If you're a mentor and you want to become a mentor investor, you can reach out to Sanjay. Sanjay's email is here. And if you're a startup, we'll be launching cohort 3 in Jan. So every 3 months, we are launching a cohort. This is the second cohort. This link is there on our website also. You can, it's a 5-minute test. We don't want to know your business. We don't want to know your domain expertise. We just want to know where you are in that startup journey, which I showed you, that bell curve up to unicorn. So that this 5-minute 10-question test will tell you where you are in the journey. So we are open for questions from anyone. For the cohort startups, our kickoff is on Monday, 5 to 7 p.m., where we'll be sharing these templates with you. So 5 to 7 p.m. And ideally, all the founders should attend the kickoff. Yeah, so open for any questions for me, or I think Parag is also there. If any last 1-2 questions, we're actually slightly ahead of time, but we can take last 1-2 questions from anyone.
Sriram Vamsi here.
Yeah, sure.
Can I ask? Yeah.
Go ahead.
So when you say strategy,
right.
could you detail it out a bit more? Because that's something which I've always wanted to from the day when I saw
for Monday, Sriram, you are our team member now. You are this side. So just wait till Monday.
No, this is Proedge, Sriram Vamsi from Proedge.
Yeah, I know that. So you're part of the cohort.
Yeah.
So let it reveal on Monday, na? Okay. 2 din ruk jao. By team, I meant you are part of the Sarthi cohort 2 team.
Yeah, got your point.
Hi, Girish. I have one question for Parag.
Yeah.
So, you know, as an entrepreneur, when we are raising funds, we have to approach a lot of angel investors and VC through cold processes, like we are shooting mails and dropping messages them on LinkedIn. So is there any, good way that you have seen that, you know, these messages are more likely to get you responses from the investors? Like, or, you know, you found any founder's message or mail really good? Like, what are the key components that we should include when we are approaching?
Yeah, so I think Parag has exited. Sriram, you want to answer that question?
No, I'm there.
Okay, you're there, Parag. Okay, sorry, I didn't see that. Go ahead, Parag, then.
No, so see, I think the first thing is, and we are different in the sense that we make it a point to respond to every entrepreneur. Maybe we don't do 100%, but we are well into the 90s, I would assume. So you will hear from us irrespective of where you write in from, even on LinkedIn. But that is not the case generally, I should say, at least anecdotally. I should say that. So the best way to approach a VC is to find somebody who knows that VC. So typically a classmate, typically somebody who the VC has invested in, or through LinkedIn, if you know somebody who knows that investor, then try and get an introduction. An introduction is better. That channel works better than a cold email. The more interesting you make the email, the more storytelling you put into it, the better it is, without it being 1.5 pages long, which people do not have the patience for. But but the more insight, the more interesting you make it, the better it is. It's hard to stand out on that front, I should say. It's like writing an essay for for a college, isn't it? It's I mean, you can get a lot of advice around it, but it's still very hard to stand out. So I don't have any particular examples to give you, except that it should show some of the passion, some of the background, some of the domain that you bring to the table as to why you are that person that the VC should back. Focus more on the on yourself, less on the product, a bit about the traction, but more about why you are uniquely qualified to solve the problem in that email, I would say. Email or whatever format you use.
Yeah. Great. Thanks, Parag, for that answer, and thank you for staying till late. So I think we are ready to close. Thank you everyone for joining us for this session. Yeah, anybody from Team Sarthi, Sriram, Surya wants to say one last word, we can have that and then we can close.
Looking forward to new challenges in Cohort 2. So we had a wonderful session in Cohort 1. So looking forward to seeing more businesses, varied businesses from different fields. So looking forward.
Great. Thank you. Thank you, everyone. Thank you for joining us. God bless you and wish you a happy Navratra and happy Dashera. Take care. God bless you. Bye.
Thank you. Thanks, Parag.
Thanks, Parag.
Bye. Bye.
Bye, Parag.
Bye-bye.
Thank you.
Thank you. Thank you.
Thank you. Thank you. Bye, Parag and Team Sarthi and fellow entrepreneurs.
Bye.
Bye.